Well, welcome. This is the Know Your Numbers podcast. Today, I have a very special guest in the name of Chad Griffiths. He's a industrial warehouse real estate investor. I'm sure he will give us more details on that, exactly what he does, but I'm really excited for this one because I know there's a lot of wisdom to gain. And so, Chad, thank you for joining me. Welcome to the show.
Yeah, my pleasure, Chris. Thanks so much for having me on.
Of course, of course. Yeah. So if you don't mind just giving us a little background about who you are, what you do, and how long you've been doing it and what people can gain from your experience.
Yeah, so I actually got into the industrial real estate market in 2005. Started as a broker, still at the same company that I started at in 2005. Used the experience and the knowledge that I gained in brokerage to start investing myself in 2014 with a series of partners and bank financing, obviously as well. We've pretty much added a property every year, so we've got a pretty good portfolio going. We've got about 80,000 square feet worth of property with an aggregate value of about 17 million. But again, we got partners on all that in debt, so that number might sound impressive, but it's we're leveraged on that as well, and we've got partners. But that's kind of our goal going forward, is we just want to keep adding a property a year and keep adding that to the portfolio.
Yeah, that's awesome. And I have to say, you're the first person that I've had on in the industrial space, so I'm excited because it's a space that's new to me. When you introduced yourself on LinkedIn, I was like, okay, that's pretty cool, but I don't really know much about it, so I guess we got a lot to talk about. So it's cool, man. I'll dive right into that. It's interesting to think about how that differs from, I mean, traditional single family real estate, and then also I've been talking more with people from the commercial sector. It seems like that's a little similar to what you got going on, but what do you look for when it comes to warehouses and the industry that you're in, and what are some things that you might try to avoid? And I know it's an interesting time, so we got a lot to dive into, but we'll start there.
Yeah, and that's a great spot to jump into it. To your earlier point about not knowing a lot about industrial, I didn't know much about it either when I started in 2005. I thought I might be working in office towers or shopping centers, like the type of commercial real estate where everybody's familiar with, right? We've all
Yep.
been in malls, we've all been in stores, we've all been in office spaces. But I heard a good saying the other day that a guy was talking about industrial real estate. He said the only thing I know about industrial real estate is when I make a wrong turn on a road and I end up in an industrial park, and I just try to figure out how I like get back to where I was trying to go to. And I think that's like a common sentiment, is a lot of people just, unless they had a reason to know something about industrial real estate, it's not taught in school. It's not like there's a reason to know it. So unless somebody has some desire to learn something about it, most people just don't know anything about it.
Right.
So I would group, maybe we could even start there just to differentiate the different asset classes in commercial real estate. So commercial real estate would be a broad term, and that generally will include subcategories of different asset classes, industrial being one, office being one, retail being another, multifamily being one, and land can sometimes get put in there as well. And then each one of those categories are going to have subcategories. So I'll just dive into the industrial one, if that's okay, because that's
Yep.
what we're focusing on. So industrial will typically have three subcategories. First being warehousing, and that's the one that you're probably familiar with in Boston. I'm sure that Amazon and all these big distributors have put up massive buildings everywhere now. There's not a market that I know of in North America where there isn't a plethora of these distribution centers going up everywhere.
Mhm.
So that's the one that people are a lot more familiar with. Really high ceilings. There's racks of storage in there, trucks coming and going at all times. That'd be the warehouse subcategory. Then the next subcategory would be manufacturing, and I'm sure you guys have a huge manufacturing presence in Boston as well, where things are basically just made. Raw materials come in, they're produced into something, and then they get shipped out to the next supplier or the end user. So manufacturing is a big component as well. And then the last one I'd say would be flex.
Mm.
And flex would kind of be a catch-all for all the properties that are zoned industrial. Like the intent is to be used industrial, but it's not necessarily catered exclusively towards like a warehousing tenant or a manufacturing tenant. And some that might come to mind pretty quickly if you were to start looking into this, into your specific market, like Boston as an example, you'll find some industrial zone buildings that are used for car dealerships, churches, self-storage, bottle depots, I've seen art galleries get put into industrial zone buildings. It all depends on what the municipality says is permissible within the in that specific building. So if the zoning regulation or the zoning ordinance terminology can differ across all the different markets, but if the rules that the municipality essentially sets say that a certain use can go in there, you can put in any conceivable amount of uses that you could imagine into those uses, even straight office. I own a building in our city here. It's zoned industrial, but we have our offices actually in it. So we've got about a 7,000 square foot office space. It's just office, but it's one of the tenants in the building. So that flex category is kind of that catch-all. Everything you could imagine could go into that flex category.
Wow, that's cool. And I think that that serves as an interesting segue that I didn't intend to talk about, but it's this idea that a lot of people, especially in the real estate industry and entrepreneurship as well, is just this idea of a niche. And when I saw you, I saw, okay, Chad has his niche of industrial space, but now you're talking about all different kinds of niches. Do you focus on different sectors within that, or does industrial for you mean anything and it's wherever you can find the opportunity?
I'm in a market of about 1 million people. So
Oh,
we're like a reasonably sized market, but certainly not a big market like Chicago or Los Angeles.
right.
So the size of my market, I tend to look at things pretty broadly in on that
Mhm.
industrial sense. And even within my own portfolio, I've got warehousing, manufacturing, and flex properties in my own portfolio. If you go to a bigger market like Los Angeles, which has 2 billion square feet worth of inventory, you're going to find guys that only focus on one specific area. Like there might be guys that just focus on buildings on the port, and that's all that they focus on is things coming in from the sea containers.
Yeah.
They're only focusing on that one specific area and only focusing on warehousing. So it kind of scales with the market. And what I've actually found as well, interestingly, is that it scales the reverse way as well. So if you go to a smaller town, like if you go to a smaller city, I should say, of call it 100,000 people, you might find people that are more generalists. So you might find somebody that works in all those asset classes that I previously mentioned, just because there's not enough inventory for them to focus specifically on it. So I'd say it scales. Small
Yeah.
town, you're going to find generalists that work on everything. If you go to some of the big metropolitan markets, they're going to be hyper focused on like one specific type of property.
Okay. And what's the exact market you're in, Chad?
I'm
City.
in Western Canada.
Okay.
So if there's any Yellowstone fans out there, I'm kind of like
Yeah.
straight up from the Dutton family ranch.
Okay. That's good. I'm not too familiar with Canada, but I know Western Canada. I've heard of Vancouver. I don't know how close that is, but it sounds like it might be a little bit further from you. That's coastline, right?
Yeah, that's on the coast, so they're a little bit further west than us.
Okay.
But Western Canada, we've really, or I should say Canada as a whole, there's really 6 to 7 major markets
Mhm.
across Canada. So when you're working in this type of space, you typically are working in all those markets, and you're pretty familiar with all of them.
Okay. Yeah, that was kind of my next question is you said your market, and oftentimes people in real estate love it because you can invest anywhere. Do you find that it's easier in the industrial space to be able to visit locales and go do potential properties, or can you invest in LA when you're up in northern western Canada and not able to travel to the States?
Yeah, great question. And I don't know if I even answered the first question that you asked about how I view property. So maybe we could get
Yeah, let's
into
do
that
it.
a bit as well. But I've taken the approach that I everything that I own is within 20-minute drive of my office, so I can get to everything, like same day very easily.
Yeah.
And that was intentional, just because I think that there's power to having market knowledge about knowing what's happening in the market intimately. So knowing what players are in the space, what transactions are happening both on the sale and the lease side, and just really being a student of the market. I think the more markets you try to enter into, the more you dilute the amount of effort that you can put into knowing those markets. And it's just pure numbers game, right? If I know my market really well, I can spend 100% of the time that I allocate towards market intelligence into my market. If I'm looking at 4 markets, then unless I'm willing to spend more time on it, then I've only got 25% or whatever number I
Yeah.
allocate towards it to studying those markets. So it's just been my approach that I like being in my market specifically. I have considered other markets. South Carolina, I've been talking to a couple guys there about potentially doing something, and my criteria has always been as long as there's some boots on the ground, as long as there's
Hmm.
somebody local that can devote that amount of time to saying, okay, hey, I just heard about this deal comparable. This property just sold. This one's like ours. Here's an off-market deal that just came up. All that local chatter that happens in the context of just the local community. Somebody needs to be plugged into that local community in order for us to have an edge. And I think that that's where you can start making some really sound investments, is if you're spending that much time becoming an expert in the market, knowing everything you possibly can about it. When you're willing and ready to make a decision, you're going to be that much better prepared than a guy that's coming from another market that's just trying to take advantage of an opportunity.
Hmm.
So that's always been kind of my approach. That being said, it is something that I would explore down the road. The projects that we've done, I've got all my own capital in it. We
Hmm.
haven't done any syndications. We haven't sponsored any deals. It's all been our deals. We start up a new LLC essentially for every property that we buy. At some point down the road, I could see doing some sort of syndication,
Hmm.
and if that's the path forward, and that could be a 5 or 10 year plan, then at that point we'd have to be looking at other markets. But my criteria wouldn't change. I would still need to have somebody local that just knows that market intimately, and not just knows it intimately, but is prepared to keep spending the amount of time necessary to stay on top of it.
Hmm. That's awesome, man. And then, I mean, that segues again into another conversation is like, what do you look for when you're what evaluating locations? Like, what draws you to South Carolina? I know for residential, there's certain, like they say, follow the Amazons, but if you're a warehouse where Amazon could potentially be using you, like what are you looking for? Is it different in any way?
Yeah, it's interesting because I'm in a market that's actually had negative net migration over the
Okay.
past 5 or 6 years. We're heavily tied to oil and gas, and with oil bottoming out in 2016,
Hmm.
that our economy moves almost in lockstep with that, with the underlying price of oil. So we've seen some net out migration, but because I just know the market so well, I was still comfortable investing in it. But outside of my market, if I was going to remove myself entirely from my market and say we're only exploring other markets, I think the first thing that I would look for is just trends of population growth. So
Hmm.
that goes counter to my own experience investing in a market with negative population growth. But I do see that coming around at some point, and I think it's offset by the fact that I just know the market well. But removing that, I would be looking for markets with population growth. So I think there's been a pretty big migration from like New York, San Francisco, Chicago. I think a lot of people, at least like my own knowledge of it, and you might know better being in Boston, or whether
Hmm.
you guys have been affected by this or not. I think there is like that slow migration towards those Sunbelt markets,
Yep.
where people just want to, if they can work from home and they don't have the confines of being in an actual office space, there's more affordable real estate. Like real estate in South Carolina is going to be significantly less expensive than in New York or
Hmm.
Chicago. So people not only have better weather, but they've got more affordability and a higher quality of life, presumably. So I'd be looking at markets that are drawing in people, because to some extent, industrial real estate is going to grow or shrink in lockstep with migration trends.
Hmm.
So the more people coming in, that's the more people that are going to be shopping for things, that need to have it delivered, that need the distribution space to accommodate it, the manufacturing space to facilitate all the production. That'd be the first thing that I look at. Then I think you still need to go a lot deeper than that. I wouldn't buy a property just because it was in Florida, as an example. Like
Right.
Florida seems like a very attractive state to me right now. I think there's going to be a lot of people moving to Florida,
Yep.
but I still wouldn't just buy a property in Florida just because it's there. So I would still look at the underlying value of the real estate. The one thing that I always look at first, or the first number, is always the price per square foot, because even if there's a tenant in the property, and industrial is a little bit unique compared to residential, at least in the fact that the leases are quite longer. That's
Mhm.
not uncommon to see a 5, 10, 15-year lease in industrial. Uh, so that the fact that there's that much more stability in industrial, at least in forecasting standpoint, is good. But there's always the risk that that tenant defaults, goes bankrupt, uh, doesn't renew their lease at the end of the term. There's always going to be that possibility of that space coming vacant. And
Mhm.
industrial is also unique in the regard that sometimes, not all the time, but sometimes it can be built special purpose for the user that was in there. So if that tenant leaves, it could require a considerable amount of money to retrofit it to get another tenant in there. So I always want to look at what's the price per square foot. So just in case that this tenant leaves, is this building compatible with what the rest of the market is? So call it $150 a square foot for a building. If I'm looking around at all the comparables that have recently sold, are they all within that ballpark area of being $150 a square foot? Because if they are, then I know that I'm going to be able to lease it out at least at near what I was getting from the current tenant. And worst case scenario, if I had to sell it, there's sales that support what that price per square foot is. So even if there is a tenant in there, I always look at it first case scenario as if it were vacant. And that's a very conservative downside risk protection kind of mentality. But I was burned on a property early in my career that reinforced that. So that's kind of that's shaped my investment philosophy, is kind of protect that downside risk first, and then you can start looking at where you can add value, or where you can start increasing top line revenue, and then forecast out a 10-year performer, however someone decides to do it. But I always start with that downside risk first. What's the price per square foot? And am I comparable with other properties in the market?
Yeah, that's awesome, man. And I think that goes to show in most of the real estate industry as a whole, is that you have to be conservative, and you have to know your numbers, quite frankly. You have to be able to say what happens if it's great to be positive, but what happens if I am out of rent for 4, 6, 10 months kind of thing. So that's not industrial alone, but that is a common theme throughout all of real estate. And that's why I think it's such a cool profession, is it's a lot of people that are cognizant of the risks, but willing to take on calculated risk in a way.
Yeah, I mean, you can't avoid risk. I mean, if you want to just
Yeah.
take no risk, then you just go and buy a T-bill, and you
Yeah.
sit on it for 10 years and you make your 0.5% return. But
Yeah.
that by the time you take into account inflation, you're losing money on that. So you have to take some risk, but I think it's just knowing what your downside risk is and being comfortable with it. And if you look at a property and you're saying, okay, well, if this tenant were to leave, and I might have to at least at a little bit less, so my downside risk is 10 or 15%. If you're comfortable with that amount of risk, then I think you start going forward and saying, okay, well, what is my upside if this
Mhm.
all works out well? Like, can I make a 15% IRR over a 5 or 10-year hold? That's when I think you start looking how positive it can get once you've wrapped your head around and decided that you're comfortable with that downside risk potential.
Mm, that's good, man. And there's so much to unpack. I have stuff that I want to go over, but I do think one of the best things about you, from what I've seen, is your awareness of what's going on in the overall market, the overall economy, and you've made that clear in just a short amount of time here with the inflation comments, and even your awareness to markets around here. I want to ask you how you stay on top of that stuff, and also how that has currently shaped. I mean, there's been a crazy amount of change in the past 2 years alone. Like, how has that influenced the way that you go about your day-to-day life, your investing philosophy? I'm thinking mainly of around the supply chain, but I know there's a lot of other topics that can be covered in that one question.
Yeah, I think the biggest thing that I do is well, first, it's a mentality that I don't think that our market is just in a vacuum, that we're isolated from all the effects that happen all over the world. Like, we're all very interconnected. A trend that's happening in a warehouse space in your neck of the woods is going to be very closely related to something that will happen in our market at some point as well. So I'm cognizant of that, and I intentionally seek out just as much information as I can.
Mhm.
So we're recording this. I'm guessing it's 12, just over 12 o'clock in your market, and I'm
Got it.
about
Yep.
10. This morning I've just been reading market reports. So I read one report on a market in Philadelphia just out of curiosity. I read some international news on what's happened in the supply chain, the industrial real estate market, and I really just try and keep on top of that, if for no other reason than I find it fascinating. But I think that anything that's happening in that market is going to trickle down into our market at some point as well. So I just intentionally try and keep on top as much macro news as I can, and supplement it with like a deep micro knowledge of our market as well.
That's good. And then, I mean, this will segue into the content creation topic, which I think you're remarkable at. And I've checked out your YouTube video, and for the listeners out there, if you haven't, please do check out Chad's YouTube channel. But how does that play into your content creation? How much of your information that you go and spread and talk to somebody or give to somebody is influenced by those early mornings studies? And we'll get into, I got a couple more follow-up questions, but we can answer that first.
Yeah, great question. And I think that it has been huge. When I started in 2005, industrial real estate was barely on the radar of a lot of people. And still to this date, there's very little quality material out there if someone wants to learn more about the industry. So I looked at it from the standpoint that I love industrial real estate. I literally think about it all the time. And I just figured, since I'm so engaged in this and I've got some experience both as a broker and as an investor, and I'm passionate about it, that I could use not just the information that I have existing, but things that I'm learning along the way as well. Like, I'm still a student of the industry. So I thought, if there's an opportunity for me to share what I've learned and what I'm continuing to learn with people that were perhaps in my shoes 16, 17 years ago, or people that just want to stay on top of the news, then I could use that to parlay into a YouTube channel. So I've prided myself with that YouTube channel of I don't talk about my company. I don't talk about what city I live in. I'm actually very careful to not even say that, because I don't want to cloud the message of making it sound like it's a commercial for my services. If anything, I just want it to be a standalone project where I'm just legitimately just trying to share as much value as I can with anyone that's interested in listening. And if it grows into something, great. If it leads to opportunities down the road, great. But my hope on it is that there's just some people that get some value from it. And if I can do that and share that with people, then it's just something that I legitimately like doing. So that was kind of the whole process with it. I've been doing it for over a year now, and I've had some good results. I've talked to dozens of people all over the world. Talked to someone in Vietnam the other day. So it's pretty fascinating, the reach that that can have. But I think it just kind of goes from the standpoint of just trying to add some value to the marketplace without expecting anything in return, and things can grow that way. So that's just been kind of my whole philosophy and approach on this so far.
Yeah, that's awesome. I was going to ask how long it's been, because I see that you have like over 1,200 subscribers or something on YouTube, which is
Yeah,
remarkable for just a year.
I'm very fortunate that
Yeah.
that's growing as it is. I don't think I'll ever be Mr. Beast or Mark Rober, but if I can just grow it incrementally by helping people along the way, then I think it's a win-win.
Yeah, that's awesome. And have you seen any fruit from that? I know you say you don't promote your business, but I'm sure you get some sort of leads or network or
I have.
relationship out of it. Yeah.
Yeah, I have. I've had people that have actually tracked me down and found out what market that I worked in. Even though I don't mention it, they've got. It's not hard if somebody really wanted to. So I've had people track me down and ask if I can help them find properties within our area, which I'm actively working with people. And then I've just built a number of friendships of guys that I've gotten to know all over North America and the world, really. So I would say I didn't necessarily go into it with the anticipation that it would lead to business, other than if it does, it's fantastic. But I've got a pretty good brokerage business, and I've got a good portfolio already, so I don't need to get business to make sense of it. Again, it's almost like combining a hobby with something that I'm knowledgeable with, and whatever comes from it, I've got very low expectations other than just having fun doing it.
Yeah, that's awesome, man. I honor you for that, because a lot of people do kind of go into it like, I'm gonna make it big. I want to be big, and then they stop short because they're not seeing the results. And I mean, I get it. It's just connecting and building something, but also just for me, I find that it helps me get a grasp of the ideas, and I'm sure you're the same. Like when you talk about it and put it out there, it's kind of a way for you to gather your thoughts on it and make a
Absolutely.
statement. Yeah.
I've found some of the topics that I've researched and done a video on. I found that I would actually weave that in when I'm talking to clients or talking to other property owners. I was like, oh, that's interesting. I was like, I just like uncovered that myself 2 weeks ago, and now I'm incorporating that news or trend or whatever it is into an actual conversation. So you're
That's
right, 100%.
yeah, it's incredible, man, and it's awesome. I think it's I think more people need to find it and use it for good. And I think that's something that I want to ask you about is like for somebody who is just getting started, or maybe they're like a little shy and don't haven't taken that leap into content creating or networking or just putting themselves out there with something to share. What would you say is a good first step or a word of encouragement for them?
I would say you can gain so much, not just in the long term for your career, but in the short to medium term by just
Mhm.
becoming an expert in what you want to do. So whether that's industrial or multifamily, or whether you want to be a single family investor, whatever you want to focus on, just become an expert on it. Just make a
Mhm.
mental commitment that you're going to know everything you possibly can about that. So I'll talk about industrial as just that's what I know. So it's what I'd recommend to someone if they're doing industrial, but there'd be a lot of overlap regardless of what someone wanted to focus on. But if it was an industrial, I'd start by physically driving all the areas in your market. So if it was in Boston, I'd start driving up and down every road that has an industrial property on it and just start taking note of what tenant is in there. Is
Mm.
there a for lease sign? Who the company is that's doing the for lease sign? That'd be something that you'd want to get to remember down the road. Were there any buildings that just sold? Are there any tenants going out of business? Are there any tenants moving out? That'd be the first step that I'd do, and I'd commit to doing that weekly for the first couple of months, and then I'd supplement that by just everything you can discover online. Go on
Mm.
to all the big brokerage websites, like the major companies, JLL, Cushman, CBRE, NAI. They're all going to have market reports that they put out for your specific market, talking about vacancy and absorption and trends that are happening, big deals that have just happened, and supplement that with just any news that you can come across specific to the market. Big company coming into the market, Amazon building a 2 million square foot facility. The more information, the more knowledge that you have, the more value you can offer to other people. So even if it's someone that's brand new into their career and they've only been into it for 3 4 months, if they know something that I don't know, or they know something that the market as a whole doesn't know, they're instantly of value to that market
Mhm.
because they've got real market intelligence. And there's something that comes with not just having that information at hand, is obviously that's currency in itself, but the confidence of knowing that you're an expert. Then all of a sudden, when you're starting to have conversations with people, if you're reaching out to perhaps a mentor or somebody that you want to help guide your career, then you actually have some information you've shown to them, or you can show to them that you're a student of the market. And I think that that's really powerful. I think real estate, and you and I both know this, Chris. Real
Mhm.
estate is a game of information. Relationships are imperative. I would never discount relationships at all, but you need to have some information, because
Mhm.
you could be the nicest guy in the world, but a busy real estate executive is not going to spend a lot of time with you if you're not a student of the game.
Mm.
So I think that that's where it would start in my mind. And not only did I start with that mentality at the beginning, I still do it. I still am on top. I probably actually read and study the market more now than I did when I first started.
Wow.
So that's what I would say, is just really go out there and find as much information as you can. If you know people in the industry, and you can grab coffee with them and you can start asking questions to really round that out. The more, if you can become a body of knowledge yourself, where
Mhm.
you just know that market really well, you have valuable information that far surpasses anything that you would get from a business course at a university.
Wow. Yeah, that's good. Dude, there, Chad, I gotta thank you because there's so much. I mean, you're just touching on you just with further education and all that stuff. I know we could this conversation could go on for 3 hours and still be valuable to me and hopefully others. But I do want to be cognizant of your time, and I appreciate what you've already given. Couple last minute questions. One is on again the warehousing side of things, and we talked a little bit about finding the right property, but for somebody that has used his own capital in all of his deals, um, I'm thinking about that. I'm like, how is that possible? Because I feel like I think of a big warehouse. I think that's got to be a pretty big chunk of change. And for somebody that's just getting started, one of the biggest, um, I guess, barriers to entry in the real estate world is that capital. And people always say, I don't have enough money. So how do you make it work if you're just getting started? If somebody wants to invest in a warehouse, what are some um, unique ways or things that they can do to get that first property under their belt?
Yeah, you hit on a really good point, is that it is a restriction of having the capital. And that's why when I started in 2005, I didn't start investing until 2014, is that I needed that amount of time to really build up my own nest egg of capital to be able to do it. So I would say that patience is a
Mm,
virtue, and for people that willing to be patient and really seek out that deal, the right deal, they'll be rewarded for that patience as opposed to just impulsively wanting to go out and buy the first thing that they see. I think patience is key in this business.
yep.
And then I'd also say to get around that, monetary intense, how intense it is to put that money in, to get
Mhm.
around that, I would say partner, look for strategic partners.
Yep.
I have a partner in every single property, at least one partner in every single property that I own. And part of the reason was to combine our capital, and so that we could afford bigger properties. Uh, uh, but there's intangibles with that as well. So some of the partners that I have, I've got a commercial appraiser on one building. I've got a property manager on another one, a commercial property manager. I've got a lawyer on one. So I've got some partners that bring something to the table that I don't necessarily have. And if nothing else, it gives an extra set of eyes on the property, so they could say, okay, well, we considered this, or where's there potential downside risk that I'm not seeing. Having partners in there it's just, there's so many benefits from it, from bringing extra capital to the table, as well as just combining the minds to make sure that you're making the best decision that you can collectively. So that's what I would say is be
Yeah.
patient. You got to realize that it does take money. Like it's a
Yep.
significant investment. If you're buying a $1 million warehouse, which is not a big property, and even if you can get 20% financing, which is probably challenging as well, let's even call it 25% financing, you're putting down 250 grand.
Yep.
So it's a big chunk of money, and that's not even a big property. So but if you had three guys, so if you had a lawyer and an accountant that you knew that wanted to invest as well, then you might be looking at 75 grand each, or 80
Mhm.
grand, whatever the numbers on that work out to. So I think that there's just a lot of benefit to having
Yep.
partners in there, and it's served me very well. Going into year 8, where I've been an investor myself, it's served me very well, and I would have done it the same way all over again.
Wow, that's incredible, man. And yeah, I think that patience virtue is something that we can all relate to. I think we all want to see the fruit right away, but it doesn't always come right away. But I mean, you're a testament for it. 8 years into the or 9 years into the market before getting that first property, but it clearly has paid its dividends. So um, Chad, I gotta thank you for your time, man. It's been a pleasure. I know, like I said, I could go on forever asking you some questions, but I want to be cognizant of your time and the listeners' time. Um, but I do usually close with one question in regards to personal finance, wealth building, and just investing in general. And it has to deal with the topic of money. For you, Chad, what is one truth about money that you wish people would understand more, or that people usually regard as a myth?
I think the one myth is that making money is easy.
Mm.
Uh, I don't think making money is easy. I think it's really difficult. I think, especially getting into commercial real estate, you're going up against some very sophisticated people, some very smart people on all sides, the lawyers, the accountants, the brokers, other owners. They're very smart and sophisticated. And if you think you can go in and just make quick money in it, I think that that's a myth. I
Mm.
think that real estate is a fantastic wealth builder given enough time, but you've got to be looking minimum 5 years out. And how I look at it is I'm looking 20 years out. Every
Yep.
decision that I make right now is going to be something that's going to position me for retiring very comfortably. I'm not looking at any get rich quick schemes. I'm not looking at anything that I can do a quick flip on and make money on. That's just not my approach. I've seen people make money doing that, and I've seen people lose money doing that.
Yeah.
And to me, that risk is just too high. Where I think real estate, if you can be that expert in the market, you can know everything about it, you can make the best decision that you're capable of making, and you can hold it for a long enough period of time. I think that that's a tried and tested way of getting wealthy. So yeah, that's what I would say is getting rich quick is a myth.
I love it, man. That's the best one yet, and that hits deep here. I know a lot of people see everything on social media, and people make it out to be something that you can do in a day, but it doesn't happen overnight. And I think we can all benefit from hearing that. So, Chad, thanks again, man. If people want to follow you and connect with you, what's the best way to reach out? I know you got the YouTube channel. I'll link that below. But if there's somebody who wants to reach out to you directly, how can they find you?
Yep, I check LinkedIn usually every day as well. So if someone wants to connect with me on LinkedIn, always looking to grow that as well. So LinkedIn or YouTube would be great.
Awesome, Chad. Well, thank you again for your time. I'll be sure to reach out when we release this. But even before then, I appreciate you and look forward to learn more about you.
Yeah, my pleasure, Chris. Great questions. Thanks for having me on again.
Thank you, man. Take care.
You too.